I think that's right. But what I would counter that with is that we clearly have a market that's still open. The interesting thing for me in this time zone year to date is that though the amount of money over $15 billion worth of issuance is high, the actual number of transactions remains relatively low. And what that tells me is investors are being relatively selective, but really committing to what they're looking for, which is growth on the one hand and size and liquidity on the other.
About the accuracy of the pricing models that the banks are using at the moment, because if you look at a Deliveroo, it seems that they were well off beam when it comes to judging what was appropriate for the market on the day.
Yeah, I think it's very dangerous always to take one specific example and then extrapolate that to a trend. I think we need to look over the last 18 months at the whole cohort of IPOs that are priced in that period. Actually, I think on balance, that is a positive outcome for investors. And that's why this IPO market remains open and is something we expect to remain open over the coming months.
Yeah, and Gareth, we've all had the same conversation many times over the years. I don't understand why the sponsors of these IPOs still think they can get away with it at ridiculous price. Who's leading here? Is it the sponsors or the owners on these? Because I think we can all agree that it was like selling a pup at the wrong price.
Look, I think where is the supply coming from in this market? I think there's three real drivers. One, it's corporate restructuring, so real spin outs from big existing liquid listed companies. Secondly, it's really about private equity looking to accelerate the exit of some of their portfolio assets, given the very robust secondary market multiples we have. And thirdly, we're beginning to see more founder-led companies coming to market as well. In terms of the clearing mechanism that you allude to, we have had the same tried and tested method. It's very much investor-led in terms of building a book of demand and finding a clearing price for these assets.
How much are the central banks to blame for all of this? There you go. There's a bigger question as well. Perhaps a much bigger issue than... Well, no, because you know what I'm coming from. We've got so much money sloshing around that actually the last person or last people to get hold of this are retail investors or stock market investors. You've got the SPAC craze now, which I guess is another great source of business for all the investment banks as well. The central banks have created a situation where there is so much money chasing so many average assets in many cases as well that actually valuations are going to be A, too high, and B, end up having volatile products at the end of it.
Yeah, look, there's no doubt that asset allocation driven by low interest rates is supporting the global equity market. And that's causing challenges for asset managers who are having to chase that performance in the underlying indices, which are now at or pretty much near record highs. From a primary markets perspective, the IPOs are being priced off those secondary market multiples, where investors are looking to see the comps where they're trading in current secondary markets. And then that's really what's driving a lot of the pricing decisions that we're seeing.